We start with semi-shock. The chip stock's getting wrecked today, taking down the Nasdaq by about 1% for the second day in a row. This after Morgan Stanley warned about a tough couple of months for the group. So as these once high-flying tech stocks get crushed, is it another sign the tech trade is cracking and are momentum stocks the biggest risk? Guy?
Well, I dig Imagine Dragon #1. I mean, just lead the show with Aerosmith the other night and Imagine Dragons.
I don't even know who the Imagine Dragons are.
Sure you do.
I do?
Well, that's the music we led the show with, #1, Tim. So just get on board.
No idea.
Help me here. Help me start this show.
I'm disappointed.
Can you please start?
Back in May, Micron reports earnings, right? Great earnings report. But what stuck to me was the fact that they announced a $10 billion stock buyback starting in September. I said on the show that night, that says to me they're no longer going to be a cyclical business. They have visibility. This is a great sign for the company. They've made the turn. Stock went from 47 to 60. Basically, given the entire move back, I was clearly wrong in that assumption. I think people are coming around to the fact that maybe the demand isn't there, and maybe these Chinese tariffs, which may or may not come, is a bigger deal than the market gives it credit for.
So there are ripple effects.
100%.
To hardware, which may not be putting those chips in those devices.
Well, but Micron's really specific. It's a good example to talk about what retaliation means in a trade war, right? Because Micron makes a lot of their chips here in the U.S., right? So this is kind of a two-pronged sort of thing. When you talk about what the supply chain looks like in the inputs that go into computers, and they go into servers, and they go into smartphones, it's a two-way street here. So to me, I think what's really important about Micron is that this is the most cyclical company. I heard Jim Cramer say something about trading at 4 times earnings. That's for a reason, okay? You don't buy it because you think it's a cheap value. You buy it because you think it's on the cusp of the cycle. And if the cycle turns, we know what happens. At the end of 2014 to its lows in 2016, the stock sold off 75%. And I think what's really important about these semi-downgrades over the last couple of days, it's a combination of maybe a lighter supply, or excuse me, a tighter supply and a little less demand. And you put those things together, and you don't want to own a stock that trades at 4 times earnings that's up, 3,000% over the last, couple of years.
Right. And first of all, I'll give you credit. You had a great call on it. I mean, over the past couple weeks, the semis in general, you said pull back. I give you credit when credit's due, Dan. But I'd say you're right about the cycle. The cycle can last for quite some time. You look at some of these semi-cap equipment names now, like the AMATs of the world, the Lambs of the world. These have pulled back 30% already year to date.
The cycle meaning the downside part of the cycle or the upside part of the cycle?
The downside part of the cycle. It can last for a period of time. His point to Micron is we saw a massive shift down lower when the cycle from the time it began to when it actually ended. So I look at some of these names that have already been, I think, really, I don't even want to use the word de-risk, but sold off dramatically. Semi-cap equipment names in particular, you could see a trading bounce here. It's going to fake the street out because I still think there's more downside risk to go in those particular names. However, I look at a name like AMD, and I'd say AMD is trading at a very, I know people look at the move it's had and say it's a crazy move higher. There's a name that people are ultra focused, not on 2018 and 19 earnings. They're focusing out to 2020 because of the market share steal that they're going to get or gain that they're going to get from Intel. So I think AMD and pullbacks, that's a name you want to stick with.
As far as Micron goes, I think people have been all really concerned about softening pricing. I think the bottom line for the memory manufacturers is there's a lot more discipline. There's a lot more of a rational approach to profitability as opposed to just controlling market share. So I think people have been, in the past, tended to overreact in Micron, and maybe that was the right thing to do in the past couple cycles. But right here, I just think Micron is ultimately more of a commoditized stock with a heck of a lot of upside if you actually think that the cycle is still with us. Semis, by the way, peaked in March, though. So, I mean, if you look at what's going on with semis, it's not like this is suddenly a big pullback relative to where we were. And I think, by the way, there is a coincidence with that and the trade wars. It's really when we started to get into this, they peaked.
I don't disagree with any of that. I think what's different about this cycle now is that semiconductors, memory chips, they're going to so many other products right now. And you could say that that's bullish, right? Because that the typical cycles that we used to see with PCs was very, you could kind of time it out, 18 months, 2 years, that sort of thing. So maybe there's broader distribution right now because there's a lot more end markets. But listen, here's the thing. Your point is a really good one. If you look at the SMH, okay, the semiconductor ETF, it's just been in a big, long base, and it can't break out. It has not made new highs. So you got to throw that into some of these other groups.
Isn't that a trade war function, though? I mean, ultimately, when did this really start? And why did they peak so much before the rest of tech when, in fact, this should be about a long-term cycle?
But could we say one of the biggest end markets is going to be the automobile industry? And when you look at GM, just made a new 52-week low today. So to me, I kind of lump them all together. It just kind of feels kind of weak here.
Right. You look at like names like Seagate and Western. Seagate and Western Days were the first names really to start to roll over. keep an eye on those names, I think. And when those start to turn a little bit or moderate, I think that's a signal where you could step in and start picking away and buying some of these names. Those are two names in particular I'm watching.
But it's interesting, quickly, to Dan's point and to David's point. You buy these stocks on valuation a lot of times because you think it's cheap. That valuation gets a lot cheaper. AMD, on the other hand, valuation has been ridiculous now for the last 30% of the move, but the stock continues to go higher. So sometimes higher valuations are actually telling you a story.
Well, NVIDIA for sure, right?
NVIDIA
I mean,
well,
again, if you get to a different part of the spectrum here, I would agree with that. I think in the semi-land, you've actually had these high growth players who are in these exotic new areas of gaming and Bitcoin, and you buy them.
But what do we do about the broader markets? I mean, is this a tell in any way about technology as a sector?
Well, no, I mean, I think that when you think about the broader market and the impact on the broader market, I look at today's, trading action we saw on the desk. I mean, there was a lot of pain out there. A lot of investors, real selling we saw in these names. It wasn't like,
in semiconductors
in the semi space, yeah, in particular. I mean,
so is it isolated? Is it a sign of something to come?
I don't know that it's necessary.
I think it is.
I
think it's the spillover effect could last for a little while. That's my opinion. There's been a lot of money being made in this particular sector, a lot of concern out there. I think the general investor is sort of a little bit scared here, and I think we're starting to see it from activity on the desk. Where does that money flow into? You could see it flow into like big cap pharma or other sectors of a little bit more from a safety perspective, but I do think that it's going to last for a little while.
Look, again, reminding people all week, and for the last couple of weeks, we've been getting PMIs, ISM numbers, exports from the rest of the world, where their export orders are low, and they're very concerned, and you're getting follow-through. You actually printed a negative PMI in Guangdong in China today, which, no one even knows where that is. Guess what? It's a major feed through some major industrial parts of China. But the tech component business is a global business. So there's no question that these companies should be feeling some of the pain here. And I think it makes sense that we've actually seen this very uneasy trade as the rest of the world, especially tech-heavy Taiwan, Hong Kong, China, are getting crushed right now.
Well, you know what are also global businesses? Advertising businesses. When you think about what FANG is, where do they get all of their revenues? Obviously, ex-Amazon, Google, Facebook. It's really advertising. That used to be one of the most cyclical sort of businesses. Now, obviously, they have the tailwind of this massive secular trend towards online advertising. But at some point, if there is a recession, it'll be the first time it's going to be a recession since Facebook was really a thing, right? You're going to see a slowdown in ad spend, and you're going to see a deceleration in their sales, and those are the sorts of things where a lot of investors who are very crowded in FANG are going to head for the door at the same time.
Acceleration in their spending, which is the message that we heard from Washington.
And quick point, again, not to get political, but you have to ask yourself, a lot of the people hoping for the market to go higher, the hopes are pinned on the fact that we'll get something done with the Chinese. So ask yourself this now. Do you think the Chinese are in a hurry to get into some trade deal with all the unrest that we've seen over the last week in the administration? Again, not a political thing. I mean, that's just fact. So I didn't think they were going to do anything pre the elections in November. Now I'm not certain they're going to do anything for the rest of the year into early next year.
Sounds like everybody's a little cautious.
Yeah. I mean, I think the questions we're getting on the desk, where do I put money? Where do I park money? All that stuff in the face of a 30%.
They're asking you that?
Of course they
that's
are.
Funny. Listen,
that's why they make
what's
money.
really funny, though? I look at my screens today, and I saw the Dow Jones Industrial Average close up on the day. I saw a lot of pockets of strength. I saw those sort of rotations.
It's defensive. I mean, look at AT&T. Look at some of the staples. Look again. Value over growth has been the story of the week, and you can make an argument that in this environment where people are very concerned on trade, they're going to continue to play that way.
Well, then that means that you think the markets overall can go higher, that there are pockets of the market that will go higher, that it's not something systemic, it's not a shock that takes the entire market down.
I don't think it's systemic. I don't think there's a shock. I mean, we never know what's going to occur, but I don't think this is the shock effect that's going to take the entire market to crazy lows. I think that this is going to have a spillover effect absolutely to the broader market right now. When there's blood in portfolios, people, struggle from a standpoint of risk. And I think risk has been sort of backed off a little bit.
Think of the August we had. Tech was overbought. Transports continue to trade well. So, Mel, you said which parts of the markets are doing fine. Retail had a bit of a pullback today, but I think largely consumer discretionary trades well, as it should. So I think it's triple Qs that are really the ones that had to correct and have.
I think an important thing is to look at earnings, right? What are earnings projections in some of these names? Look at AMD. We talk about AMD. 2020, the street's looking for 89 cents a share. Our bull case scenario.
Why are we talking about 2020 earnings?
Because that's what
no, listen.
I'll tell you why. Because they are taking market share from Intel and the expectations of that.
A customer of AMD. They sell equipment to make chips.
I get it.
Okay. They just said that they think the back half of this year's their estimates are too high. That's what started this whole sell-off here. So
100%.
we're talking about what's going to turn the market right now. Think about that we could have been way front-end loaded, right, for earnings estimates, into the back half of the year. And
but you're missing my point
that's
on
a
that.
dangerous
It's not about that.
You're missing his point.
Okay,
I'm saying
but the
that
stock's
you
up
pick certain
100%.
stock.
No one's missing the
100%
point,
for a reason because
it's up 100%.
It's up 100% for a reason because expectations are they are going to take significant market share from AMD. No question
From
about
Intel.
that. The street's
Let's
at
keep it
89
straight.
cents in
From
2020. We're at $1.25. It could be 100. It could be $1.75. Put an average market multiple on that
David,
at 27
I think
bucks.
that's in
You're
the
at
stock in
44
the high
bucks a share.
20s. It was trading at $9 7 months ago.
I get it.